And welcome to the Tear Sheet Podcast, here on site in Orlando at the FIS Emerald 2025 conference. I'm the Tear Sheet host and editor, Zach Miller. Today we're talking about the evolution of loyalty, how financial institutions stay relevant. Credit card spending is at an all-time high, but economic uncertainty may begin to impact discretionary spending in the coming months. For financial institutions aiming to disrupt and stay relevant in the moment, a sound loyalty strategy is critical. As merchants look to drive value for their customers, Mladen Vladic, FIS, General Manager of Loyalty Services, will discuss how financial technology can enable optionality and create value for customers. He'll discuss the emerging loyalty offerings that are resonating as customer behavior evolves and the outlook for loyalty as institutions refine their digital experiences at scale. Mladen, welcome to the show today.
Thank you, Zach. Thank you for having me.
So I did introduce you. I'd love to hear you in your own words. Like, who are you and what do you do?
Once again, Mladen Vladic. I manage the FIS's loyalty business. I have been in the industry for a very long time. Just a quick summary, what we do is we support the full service end-to-end loyalty for financial institutions. And then over the course of the last couple of years, we built a loyalty network, which allows customers to redeem their loyalty currency, whether it's points or cashback or miles, to act as a payment tender at the point of sale. I have heard so much good feedback about the podcast, and I'm privileged for the opportunity to be here today. So
well, I'm excited to talk to you today, and thanks for introducing yourself. So with credit card spending at record highs, how are financial institutions rethinking their loyalty strategies to maintain customer engagement and amid economic uncertainty? Is one of the things we're talking about over the past couple of days.
We are truly at a transitional time when it comes to the consumer rewards and consumer loyalty. And you alluded to the fact that the credit card spend is at all-time high. And what I would say is that at the industry for a very long time, including FIS and many other providers, really over-indexed on card transactional loyalty. And what this does, this actually forces the industry to rethink the whole approach. And as I think about transitional periods, right, or evolution, I am always a big fan of more evolution versus revolution.
Yeah, we never use the word revolution here.
Which means, you know, keep what's working and keep evolving.
Right.
And I also think that, you know, the big concept that I'm a strong believer of is start with the share of mind, maybe even before share of wallet. Because I argue that once you capture share of mind in this, you know, attention grabbing economy, if you will, then share of wallet is going to come as a natural consequence of that experience, right? Or that difference that you make. And I also believe that now more than ever before, knowing your customer, zero-party data preferences is so essential, right? Because that allows you to take a holistic approach to managing the customer relationships.
Also, customers are beginning to demand that more, right? If I'm a customer, I'm used to my experiences at Amazon or Netflix. I want my financial institution to know who I am as well, right?
Such a great point, such a great point. And what I would say, for the longest time, you know, banks were looking how to match or compete with another bank. And I think in this era of digital experiences, the experience that the financial institution is offering to the customer is being measured against other experiences that they have with other brands non-related to financial institution, which, to your point, is then posing expectation on financial institutions to evolve their experience for the customer.
And I think it's compounded a lot, as you're saying, by the fact that financial institutions historically had product-centric focus, not customer-centric focus. Right?
Product-centric versus solution-centric focus, right? I'm a big believer that for you know, we have to focus on solutions, because to the customer, it really doesn't matter that it's multiple teams at the financial institution making a magic happen, right? And bringing that experience. They're looking for a solution, right? The fact that it's multiple teams, you know, multiple solutions put together, it's secondary to the experience that they're looking for.
That's a great point. I want to move into like sort of helping you set the table for what new forms of loyalty or rewards programs are emerging as most effective in today's environment, given what you've described before.
I would say the most important guiding principle as I think about the future or evolution of this industry is think about embedded loyalty, right? And what that really means is that the loyalty and rewards and engagement, it's not afterthought. It's as you're developing the vision for the roadmap, how to stay relevant to the customer, you're embedding loyalty as an integral part of that experience that you're bringing to the customer. And when you have that mindset, then I think that that then forces you to be more proactive in terms of bringing those experiences to the customer. I will call out what I believe is so relevant. It's all about having a constant engagement with the customer, right? Constant reminder of the value of the experience, of the convenience that you're bringing to the customer in digitally native first, digitally first type of approach. The last thing I would say, we are big believers in partnerships. And the reason for that is I would argue that there are very few brands in the industry today that can innovate fast or as fast as consumer preferences are changing. And so to me, the better approach is to partner. And so I do want to call out two partnerships
I was going to
that
ask you
we are
good examples.
we are so excited about. The first one is with Apple to bring pay with points functionality to Apple Pay, which is accepted at 85% of the merchants nationwide. So in terms of the relevance, coverage, being in the moment, that's just going to be a tremendous impact for the programs that we manage and the relevancy that we bring to the marketplace. And then the second one that we are really excited about is the partnership with a company called Built, right? Where we allow customers that are earning points for paying rent and mortgage on time to redeem their points as a payment tender at the point of sale. And I think it's a great example of the ecosystem that we are building in the industry, right? Where we are connecting more and more endpoints and doing all of that in an effort to bring more relevancy to the customer in the moment and removing as much friction as we can from that experience.
In your introduction, we talked a little bit about customer behavior changing and expectations. And I'm curious, from your perspective, what trends you're seeing in customer behavior that are influencing how financial institutions approach customer retention.
We are seeing report after report that is speaking about generational wealth transfer, right? And I read
talking about this for a decade.
I have been talking about this for a decade, certainly for the last few years, very actively. I read a report a couple days ago that is referencing 124 trillion by 2048.
Okay.
And I think we can all agree that's going to have an impact on economy and certainly on the banking as the industry. And I see that as a tremendous opportunity and a threat and opportunity at the same time, because as I think through the lens of how rewards and loyalty can be used as a tool to help banks stay relevant, it's about solidifying the holistic relationship with the customer. The reality is, just because 3 generations of the family banked with the same financial institution is certainly not the guarantee that the next generation is going to do the same, unless you solidify the relationship, unless you bring the experience that they expect. And I think that's new, right, for the financial institutions. And then that's putting the expectations on all of us to help them tie experiences, services, products that they serve to the customer in more unified and frictionless way.
So in an environment where financial institutions are investing heavily in loyalty programs, and there seems to be sort of a new arms race, I guess, to launch loyalty programs, one of the challenges you have is differentiating your program from others, so it doesn't look like it's just a Me Too type program. What are some of the things FIs can do to differentiate their programs?
There's a lot, right, on this topic.
First of all, is that a fair assessment?
It is a fair assessment. It absolutely is a fair assessment. And, and we can go ahead and, go many different directions on this topic and get really tactical. But I would say on the very highest level, on the macro level, I think that combining the way that you think about engagement, customer engagement, and let's say the loyalty is extension of that, and digital, like in one roadmap. I'm not suggesting that it has to be the same team, but the way that we think about the strategy, it is a joint roadmap.
It's not something external.
It's not something external. It's not an afterthought. It's not two teams do not collaborate and work together to come up with the strategy that's then executed in many multiple phases, which is fine. We understand as the consumer experience evolves, you're going to make modifications, and you don't want to bring all of those experiences at once, but it has to be a unified strategy. And I do want to, call out here, I feel very bullish about the role of AI in the engagement, rewards, loyalty industry in coming years. So the way that I think about this, having this autonomous decision-making tool that can negotiate outcomes and execute on the strategy and get better over time, I think it's going to have a tremendous impact on our industry, both in terms of servicing, I would argue, number one, and then how we present the product, the value, through what channel to the customer. Because if you think about this industry for the very long time, it's all about segmentation and personalization. How do I segment my portfolio? And then how do I personalize the offer to make sure that they understand the value, take advantage of the value that I'm willing to give? So I am very, very bullish in terms of what AI does for our industry. I also would say, just the final comment, I sometimes feel like general public is not really understanding or fully appreciating how quickly this is going to become a reality. It is coming so fast.
Even as a professional.
And we know because we witnessed this in some other aspects. It only takes the first one or two to get it right. And then it's a race. It's how quickly the rest of the brands can adopt and bring that experience to the customer.
I agree with you that we're underestimating it.
It is absolutely, it's overwhelming, right? It's almost overwhelming.
So that's a great segue to our last conversation. Maybe we zoom out a little bit and how you see the role of loyalty programs themselves evolving out into the near future.
I would say, to allude a little bit to what we discussed before, I do believe that as you're building the roadmap and bringing the new feature functionality tools to the customer, loyalty needs to be embedded in initial thinking about how to make it a component of that service that you're bringing to the customer. And then it's been the case for many, many decades, think about engagement and loyalty and rewards as a tool to increase adoption, whether it's acquisition, activation, usage, or retention. And I will be, I also want to call out something that I feel very strongly about. I would argue that the loyalty industry needs rewards, but rewards itself is not a loyalty strategy. It doesn't have to be a component. It can be a component, but it's not the only thing that is going to make it successful. And as I alluded to before, we over-indexed on rewards. And, there are many brands that are hesitating to do something or innovate something because, there's a cost constraint, there's a budget constraint, right?
Has to fund the loyalty program, right?
Somebody has to fund the loyalty program. And many times it doesn't have to cost too much. Sometimes it's about taking the same assets and packaging them differently, and constant reminder of the value prop that the brand brings to the customer.
I appreciate that. And we'd like to end our conversations. We've done this with a few of the podcasts we've done here on site with a very serious question. Your favorite Disney character and why, since we're on the ground in Orlando?
I have two girls that are in their teens. So, Mickey Mouse is still, the main topic or the main character for my younger one, and then obviously Harry Potter for my older daughter. So we go back and forth.
I see.
We go back and forth in my household.
Mladen, thanks for joining us on the Tear Sheet Podcast today. It's been really enjoyable talking to you.
Thank you for this opportunity, Zach. I enjoyed it.
Let's do a just look out there.